Hey guys, Ken Boyd with the Accounting Accidentally website, where you can find over 400 blog posts and over 350 links to my YouTube videos on accounting. Wanted to talk about a really interesting article in Forbes magazine, Inside the $2.5 trillion debt binge that has taken S&P 500 titans, including Boeing and AT&T, from blue chips to near junk. So what is going on in this article? Great article. Suggest you read it. Well, I'm going to go up one slide. Interest rates have been at historic lows. Corporations have raised money by issuing corporate debt at low rates. It's cheap to borrow money. The pandemic has impacted revenue and earnings and the ability to repay debt. So after all these companies borrow all this money, revenue and earnings take a hit after the pandemic. The bottom line is that firms that are in debt have less flexibility and, in particular, lower retained earnings to invest in the business. So I thought what I would do is to take part of a template that I have here and just talk about the real financial impact of taking on this debt. So let's make the distinction between liquidity and solvency. Liquidity is the ability to generate enough current assets to pay current liabilities. The most common formula is either working capital, which subtracts the two, or the current ratio, which is current assets divided by current liabilities. This is a short-term focus. Can you make enough cash and get it in the door over the next period of months? Solvency, on the other hand, is a long-term focus, which is, can you generate enough assets and cash in the door to pay off long-term debt and to reinvest in assets if you need to do that? So when these companies take on lots of debt, these ratios change. Debt to assets, total liability divided by total assets. Liability goes way up. This ratio gets bigger, and you have fewer assets to pay off a growing amount of liabilities. Times interest earned talks about the amount of interest you had to pay on debt. As the debt increases, your interest expense goes up. You've got a bigger chunk of money you need to pay in interest. Another way to look at it is plan assets divided by long-term debt. It flips the debt to assets ratio to say, in terms of non-current or long-term liabilities, how much do you have in dollars in assets to pay on those long-term or non-current liabilities? So these are solvency ratios. The difficulty being that when you take on more debt, you've got to use more earnings to pay interest expense. You have less flexibility because you have to make these debt payments. Now, it also would affect profitability ratios. That interest expense is a bigger expense on your balance sheet, which means your earnings are going to decline. That affects return on equity. If net income is lower because you've got to pay all this interest expense on debt, return on equity is going to be lower because net income's lower. Earnings per share will be lower. Again, growing interest expense, net income is lower, earnings per share will decline. So the profitability ratios are impacted. The solvency ratios are certainly impacted. And one final thing, when you're thinking about your company's liquidity, again, month to month, you've got a bigger amount of current liabilities, which represent the current portion of the long-term debt you have to pay. So every month and every year, you're going to have to pay more interest expense on debt, and the interest expense you have due in less than a year is a current liability. And it's going to be more difficult to have a positive working capital if your interest expense is huge, current liabilities are bigger, and you can't generate enough current assets. So that's how some of these ratios are impacted. Remember also that if you go to Accounting Accidentally, you can click Get It Now or go to the downloads, and you'll get this page, the 23 spreadsheets that explain some really tough accounting concepts. Here's the current list of the spreadsheets you'll receive. Each spreadsheet has a link to a YouTube video. And all you need to do is email me, ken@stltest.net. You'll get a download link, and you can download the spreadsheets all at once or a few at a time if you want to. Thanks for watching, and we'll see you next time.